Guys, this is Ty Zen, and I got my buddy Eric G with me,
How you doing, fellas?
and we're cruising right now at 33,000 feet in the air, heading from Dallas to Las Vegas to spend all the riches and all the profits that we made from investing into
I'm gonna be making
Ethereum.
money. I don't know about you. I'm gonna be making money in Vegas.
So
I got a plan.
yeah. So I guess we're gonna go up there and just blow all the profits we got, guys. But no, seriously, guys, we are headed towards Las Vegas to meet with our business mentor and coach, so that we can build our online business. Okay. In this video, guys, I want to discuss with you guys the importance of volume and liquidity when you are trading Bitcoin and cryptocurrencies, right?
Well, when we started getting into a lot of trading, and more particularly when we started trading cryptocurrencies, Bitcoin, things like that, we constantly got a lot of questions asking about volume and liquidity.
Can you speak a little bit louder, because I can barely hear you?
You don't need to hear me. I got a microphone. They can hear me fine. And what I wanted to do is go ahead and just pose that question to Ty and record it and say, hey, what is it about volume? What is it about liquidity that people keep asking that you can share as far as trading in the cryptocurrency market?
When you look at trading or investing into trading is where you buy and sell it on a short term or a long term, and then investing is buying and holding it over a long term. Okay, so just to make sure that we're on the same page here, the people who are trading usually use technical analysis, use the price charts to make their decisions, and the investors usually make their decisions based on fundamental analysis, or the fundamentals of the value of the what they're trading, right? So when you are trading or investing in Bitcoin or any cryptocurrency, it's extremely important that you guys look at the liquidity and the volume of what it is that you're trading. So, because what happens is when you want to buy something, you want to be able to get filled instantly. Okay, so for example, if you guys buy, for example, like Bitcoin, there's like 60-70 million dollars worth of Bitcoins traded every day. Okay, so that's to give you guys an idea, like something like a Costco, a stock like Costco or Best Buy or Broadcom, they would trade like 3 million shares a day, 3, 4, 5 million shares a day, somewhere around there. And the price of those stocks are usually around, let's just say, for example, $50, right? If you take $50 times 3 million, I don't know what the math is on that real quick.
He's not a Scientologist. He can't just do math on the spot like that.
No. I'm not one of those Asian guys that's good in math, right? So if you take like a stock that trades 3 million shares a day times $50 a share, we're talking about like $150 million worth of stocks being traded for like public and popular companies such as like Costco or Best Buy or Broadcom or Clack or Yahoo.
So you're saying, right, that that equation, the $150 million worth of stocks being traded, that would represent the volume of things being moved around? Yeah,
of how much value or dollar amounts being traded.
Okay.
So when you go into I just wanted to throw that out there so that the people who are new to trading cryptocurrencies or Bitcoin, they understand, they have a frame of reference in mind. Okay. Because most people understand what Yahoo, what Broadcom, what Clack, what Costco or Best Buy, what they are. So when we talk about cryptocurrencies, it's important that they relate it to something they already know, right? Okay. So that's what I like to do. So if you look at like something like Bitcoin, it trades about $70 million a day. So that would be like half the volume That would be like the equivalent of trading like a $50 stock that trades 1 million to 1.5 million shares a day. Now, in the world of trading, normally you do not want to trade something that trades less than like $1 million a day, right? Like 1 million shares a day. Because what happens is if there's not enough liquidity or enough volume of shares or enough volume of Bitcoins being traded, every time you hit the buy button or the sell button, your orders don't get filled immediately. And so what happens is when your orders don't get filled immediately, you get hit with a spread or what they call slippage. So let's say that I want to buy, the slippage, just basically the slippage or the spread is the difference between the bid and the ask of what the people want to sell it for. So if you want to sell your Bitcoins for 400 and I want to buy it for 395, the difference between that is like $5. So that would be the spread. So the more liquid something is, the tighter the spread. So if Bitcoin is trading right now, it's usually trading within like 5-10 cents, sometimes within a few pennies. So the liquidity is very high. There's a lot of volume being traded, so you get a very, very tight spread. Now, if you take something like Dogecoin or something like NXT right now, the difference between what the buyers want and what the sellers want is a little bit wider. So when you go in and you buy it, you already take a hit because you have to pay a little extra for that spread. So the more volume that you have, the tighter the spread, and the easier it is for you to unload your cryptocurrencies when it's time to get rid of it, or when it's time to buy it, you can get filled instantly.
So when you're talking about volume versus liquidity, they're essentially the same thing in terms of more volume has more liquidity. It means there's more buyers and sellers there that are willing to meet at a closer price.
Yeah.
Whereas if you have something that has less volume being traded at any given day, then it's going to have less liquidity because you cannot get rid of or purchase the shares or currency or whatever it is that you're trading at the price you're looking at, because there's going to be a bigger spread. There's not always a buyer there. There's not always a seller there at the exact price you want.
Exactly. So what happens is this. What happens is when you choose to trade a cryptocurrency, any type of cryptocurrency, the first thing you want to do is you want to select a cryptocurrency that has a lot of volume being traded. So in the world of cryptocurrencies, they don't refer to it as shares. So if you trade Bitcoins, they just refer to it as how many Bitcoins are being traded each day. And if you're trading Litecoin, they check to see how many Litecoins are being traded. So because the number of cryptocurrencies like Litecoin, Dogecoin, or NXT, or Ethereum, or Bitcoin is different every day, since we live in America, the easiest way for us to have a standard so that we know how much is being traded every day is to convert it to US dollars. So when you look at the price charts in the exchanges, they all convert Litecoin to US dollars. They all convert the ethers that you trade to US dollars.
It's easier for most people to think of things in terms of the value against the dollar.
So if you happen to live in Europe, for example, you might want to switch your browser or your platform or your software to where it shows in euro instead. And the reason for that is because most people that live in Europe, they understand the euro. Like you and I live in America, so we don't use euros.
It just provides some form of consistency of whoever the trader is versus whatever you're trading.
Yeah, it's a common benchmark or a common standard, so everybody knows what it is. So for example, just to give you some ideas, like I checked before we got on the plane today, Bitcoin was trading around $70 million as of yesterday. And then yesterday there was I think $8 million worth of Ethereum that was traded. So that's the second most popular cryptocurrency that's being traded right now. It's hot on the market. It's skyrocketing, so everybody's jumping on it. The other thing too is that Litecoin for some reason has always been very popular, and it's trading around $2 million, over 2 million yesterday. And then to give you an idea
of volume
of US dollars, in volume. Because if I tell you it traded, I don't know, a few million Litecoins yesterday,
that means nothing to me.
Yeah, you don't have a frame of reference. But if I tell you that Bitcoin traded $70 million yesterday and Ethereum traded $8 million yesterday, and then Litecoin traded over 2 million, almost 3 million yesterday.
I have a reference for
now you have a
comparison.
reference of how much volume is being traded. And so, for example, the next one is like Dogecoin. It was trading like around 400,000. Why it's still trading high, I don't know, but I guess that's a good thing because I have a bunch of Dogecoin also. And then like NXT, the NXT that you and I invested in, it's trading around 41,000 yesterday.
Well, so we talked about the importance of having a higher volume.
Yeah.
And obviously, whatever market you're trading, if you're trading Doge, if you're trading Litecoin, if you're trading Ethereum or Bitcoin, you're going to want to look for what is good volume for that cryptocurrency. You want apples to apples, not apples to oranges. So what is good volume for the market that you're trading in? But let me ask you another question. And this gets down to brass tacks, and I think the listeners really want to know. I want to know, what exactly do you do to look at volume? How do you find that information, and then how do you implement that?
So one of the best places that I like to use, one of the best websites I like to use to look at how much volume is, one way is to go to each exchange. Like for example, like you can go to Bitfinex and check the volume that's traded on Bitcoin, and then you can run over to Bitstamp and then check how much volume is traded there, and then run over to Poloniex, and then BTC, all these different exchanges, and add them up.
Even though you're just exchanging one cryptocurrency, there are multiple exchanges trading different amounts of volume of the same thing.
Yeah, it's not like you're trading oil futures or copper futures or S&P 500 futures, where all of it is at the same exchange in Chicago. Right now, the way that the cryptocurrencies are traded, they're all over the place. They're all traded at different exchanges. There's one not big player that controls everything just yet.
Okay, so the idea would be first you'd want to check out all the players, see who's got higher volume, and that's who you prefer to trade with on that day.
And the easiest place that I found to go find that, so that you don't have to do the math, because I'm not one of those Asian guys that's good at math. So I like to go
neither am I.
So I like to go to a website called coinmarketcap.com, and it's spelled just like you hear it. Coin, like a Bitcoin, market, like stock market, and then cap, like the cap you wear in your hat, on your head. And you go to coinmarketcap.com, and every day they sort out the biggest, the highest volume cryptocurrencies that's being traded. And ever since the website came out, Bitcoin has always been number one. And then the rest of them.
What's really nice is in coinmarketcap.com, if you click the currency that you want to trade, the cryptocurrency you want to trade, let's say Bitcoin or Ethereum, for example, you click on it, it'll take you to a second page where it shows you all the details for that coin.
Yeah, and then that's what I like.
And then it also shows you the various exchanges and how much volume each exchange is doing. So that's...
Yeah, so like when I want to, let's say I want to trade Dogecoin, for example, I would go to CoinMarketCap and I would see where most of the volume is being traded at, right?
Sierra Mist, Dr. Pepper.
I would see where most of the volume is being traded at, and then after that, I would go to that exchange, open up an account, and then trade the volume there. Trade the Dogecoin there, or the NXT there, or the Bitcoin, or the Ethereum, or anything like that.
Now, is there a way for people to look up the volume history, so that way they can see, okay, because if you're looking at a really small chart, then you're getting a really magnified look at what it is, so you don't really have a comparison of if that's high volume, if that's low volume, when a lot of trades are happening.
The best place to go is still at CoinMarketCap, because they consolidate all the data from all the exchanges so that you can know about it.
Okay.
You know, so hopefully that helps you guys understand more of how to use volume and the liquidity to determine what cryptocurrencies to trade. Now, here's something that our friend LeonFu.com and David and I are all trying to figure out is what's the ideal dollar amount that's being traded. Right now, it's so far we've noticed that if something trades over like $500,000 US or higher, right, then it's worth trading. But if it's less than that, it becomes very, very risky because the spread is a lot wider.
Yeah.
So in the beginning, if you're an experienced trader, I would say that you can take the risk of trading a cryptocurrency. How you doing, guys? I'll take a ginger ale.
Okay.
Thank you.
for you.
The water's perfect for me.
Do you want ice?
No, thank you.
Okay.
Thank you.
Yeah. Yeah.
Thank you, miss.
Thank you very much. So, what if you are an experienced trader and you have experience trading like forex, stocks, or futures, or options, or anything like that, and you're successful at it? Then I would say that you can afford to take the risk of trading like of trading a cryptocurrency that trades like $500,000 or higher. You can even go as low as like 300,000 or 400,000, but just keep in mind that the spread is going to be very wide. So every time you buy and sell something, you're going to lose a lot on the spread.
Now, this might be getting into a different arena.
Yeah.
But I'm going to go ahead and throw the question out there and ask it anyway.
Okay.
When you are dealing with volume, and what you're talking about is, we're very familiar with stocks that, hey, if the volume is below X amount, you just don't even trade that day.
Yeah, like for short-term trading, I don't trade anything less than 1 million shares a day.
Yeah.
And then for long-term trading, I don't trade any stock that trades less than 500,000 shares a day.
Okay, so that's my exact question.
Yeah.
We have short-term traders and long-term trader investors.
Yeah.
With the cryptocurrencies as well. Will that make a huge difference?
Yes,
in
it
terms
does.
Of when they should enter, when they should exit, if they're a long-term trader, because maybe they don't care about $5 worth of slippage or something like that. If they're looking for a longer-term trade.
That's a very good question, because if you're trading something that has if you have a long-term approach, you're not trying to scalp the market, which I don't recommend anybody scalp the market, especially in cryptos, because the liquidity is horrible.
And scalping is where you're basically just trying to get in, make a little bitty advantage, and then get out, and you basically make a couple bucks every time you trade.
Yeah. So it's every time the price moves up 1 or 2 ticks, you grab it. Okay. So.
Which some people do. It's not particularly our style, but
I don't recommend it, because
you need for the cryptocurrency market, you need an extremely high liquidity to be able to do that.
Yeah. So to answer your question, if you are a short-term day trader and you just want to trade in and out, I would recommend sticking with something like Litecoin. Bitcoin is the #1 liquidity and volume, and then I would recommend something like. I don't know if I can recommend anything, because I'm not a licensed financial advisor. So just be aware of that, guys. I'm not a licensed financial advisor, and in America, we are not allowed to recommend anything if you are not a licensed
financial advice.
Yeah. So I'm broadcasting from one person to thousands of people that's listening to this. So according to U.S. law, I should not require a financial advisor license, but so just to be on the safe side, I don't want to get in trouble. So I'm going to say that if I was trading,
disclaimer.
Yeah, if I was trading short-term day trading, I would make sure that I trade the highest volume and highest liquid cryptocurrencies, and the #1 right now is obviously Bitcoin. It traded $70 million worth yesterday. And then I would trade, the second one would be Ethereum. It traded like over $8 million worth yesterday. And then Litecoin traded over $2 million yesterday. And the fourth one would have to be something like Dogecoin, believe it or not.
Now, what kind of, so we got a recommendation for what you would do for a short-term trading strategy. What about a long-term trading strategy? What kind of volume would you want there? Obviously, I know how you are. You're usually really precise. You like a nice clean entry, a nice clean exit.
Yeah, I do, because it minimizes my risk.
So you still like a high volume, correct me if I'm wrong, when you're entering and exiting, even on a long-term trade. But what about those out there? Is the trade-off basically whether or not you're willing to take the slip? Is it worth $10, $20, whatever the difference is on there?
It's not really worth it, because here's
$50, depends on how much you're trading.
Because here's the reason why.
It adds up.
It adds up, and let me just do the quick math for you, okay? Let me just do the quick math for you. Let's say that I trade something that has a lot of slippage. I typically, when I do for long-term trades, I typically invest anywhere between $1,000 to $5,000 US dollars
Okay.
into that cryptocurrency.
So let's just say 10 Bitcoins to make a nice round number.
Yeah, so, well, Bitcoin's at 400, is this around
420, it'd be about 4,200 bucks.
Yeah, so 10 Bitcoins would be about $4,200. So what happens is, if you get slipped too much, what happens is some of those currencies that, for example, like right now NXT, it's trading at like 40,000. So let's say that if I wanted to buy $1,000 worth of NXT, the problem that you run into is that as soon as you start buying it, guess what happens to the price?
It's changing.
Yeah, then I become the person that jacks up the price of the NXT simply because there's so very little volume that when I go in there and buy it, sometimes they only buy that day, at the moment that I get in, there may be only $1,000, $2,000 worth of liquidity.
So you only get a partial fill at the price you want.
Yeah, I only get a
and then
partial
the rest of
fill.
it, you're buying at a more expensive rate.
Exactly. So, you know, that's it's just really, really hard to get filled. So I actually hurt myself investing in something that's a low liquidity. So, like, for example, like when you and I invested into NXT back when it first came out in 2014, there was a huge rush to come in because it was the first true Bitcoin 2.0 cryptocurrency. You know, that was not just a duplicate of the Bitcoin software, but a completely new software. So at that time, there was hundreds of thousands of dollars, and sometimes there would be over $1 million traded in a day. So at that time, when you and I got into it, it was worth it because we did not get hit hard on the difference between the buyers and the sellers price. So, but nowadays, I recommend that if you are going for the long term, if you don't pay attention, some of the smaller traders and investors, and when I say smaller, I'm talking about people that invest or trade less than like $500.
Actually, I've got a question that might be a little off topic. Is it considered being a financial advisor in the cryptocurrency world?
Well, because
I know if we're talking about investing in stocks,
I know, but
I don't know if that's a.
The thing is, none of the governments recognize it as a real currency, so maybe I can't. But I think that according to U.S. laws,
so technically, I can license you to be a crypto advisor.
From my understanding, U.S. law is that if you broadcast your message out to more than one person, then it's not really considered financial advice. But just to be on the safe side, I like to be on the safe side. So, you know. But back to what I was saying is that if you let's say that you want to invest for the long term, some of the smaller traders, if you read in the troll boxes and in the comment sections of a lot of the sites, when they discuss trading, they will invest into a small they will invest into a small they want to invest into a small altcoin or a cryptocurrency where it goes up like 50 times or 100 times.
They want to invest in a lump of coal and hope it turns into a diamond.
Exactly.
Okay.
The problem with that is for someone like us who needs to invest, like, to make it worth our while, we need to invest like $1,000 or something. There's not enough liquidity there to invest into it. So that really is prohibitive to us and to people who want to invest more than $1,000 into that cryptocurrency. So that's why I just stick to the ones that trade over $1 million a day.
Now, I think it's important to note also that what Ty was talking about with if you're trading in a market with small volume, low liquidity, and let's say you want to put in $5,000 US dollars or 10 Bitcoins worth into that altcoin or cryptocurrency, then what happens is your investment moves the market, and you're also getting a partial fill at the value you wanted. The rest of your fill you're getting at a higher rate, so you're paying more than you intended for your entry. You're not actually getting in down here. You're getting in here, and your exit strategy was up here, but now the whole window's closed. I wanted to mention that it's important to note, when it comes time to exit in that same scenario, it's going to happen again. Your exit strategy, now you tried to get filled here, but you got filled from here through here. Now your exit strategy was up here. Once the coin reaches that amount, let's just say in a perfect world, it goes straight up to that value, and you decide to exit, guess what? you're pulling out 10 Bitcoins worth, you're pulling out $5,000 worth of that cryptocurrency, it's going to move the market again against your favor, because now that you're exiting, you're selling off, you're going to push the price back down, and now you're not getting filled at your exit price, you're getting filled all the way down. So you've got a really mushy profit margin there. It's really changing the entire time that you're going in and you're going out. With high volume and high liquidity, you can get a clean fill at your entry target price, and you can get a clean fill at your exit target price, and that's really important for short-term and for long-term investor traders.
All right, guys. So appreciate you guys watching this video with us, guys. If you guys would like to learn more about trading and investing in cryptocurrencies and Bitcoin, make sure you subscribe to our channel. And once in a while, guys, we're looking at doing some webinars on Google Hangout, and also on the YouTube live stream once I figure out how to use it. So if you guys would like to join us, look in the description below this video on our site, and there will be a place for you to enter your email address. And if you enter your email name and email address in there, guys, whenever we have these live events, I will email you guys and let you guys know. I personally enjoy the live events because I get to answer and talk directly to the other traders, other cryptocurrency traders, and I know Eric enjoys that as well, because neither one of us like to type, so we'd rather just look at the comments come in and just answer it from there. So thanks for watching this video, guys, and if you guys have any friends or family or relatives or your fellow investors or traders that are interested in learning more about trading and investing in Bitcoin and other cryptocurrencies, make sure that you guys subscribe to our channel, share this video with them. All right, thanks, guys, and we'll see you guys in the next video. I accept Bitcoin.